Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. Metro Manila is under alert level 4 starting today. That means restaurants, personal care establishments, and churches are allowed to reopen at limited capacity. But according to the Employers Confederation of the Philippines, not much will change. ECOP President Sergio Ortiz Luis said classifying Metro Manila under Alert Level 4 means we are actually at GCQ with very high restrictions. He said with only 30% al fresco and 10% dine-in capacity, many restaurants will still not reopen. The Trade Department earlier said 100,000 workers can now go back to work with the new alert level system, but Ortiz Luis told the chiefs that's only about 10% of the 1 million plus workers who could return to work if NCR had been placed under GCQ instead. The industry leader also said he does not believe the new alert system is a sufficient response to COVID-19. Instead of the new quarantine schemes, Ortiz Luis is calling on the government to invest in more hospitals, COVID centers, isolation centers, as well as better pay and benefits for healthcare workers. The country's economic freedom ranking improved by 4 places. It's after registering better scores in so-called sound money or inflation measures and money growth. That is according to a global report that measured 2019 data. The Economic Freedom of the World report released by the Fraser Institute said the Philippines ranked 58th out of 165 jurisdictions in 2019. That report measures economic freedom based on 5 categories, including sound money, international trade, and legal system and property rights, among others. Now, despite the year-on-year improvement, though, the Philippines score is lower than its 2015 rating, in which it ranked 52nd. Now, cash remittances from OFWs reached a 7-month high in the month of July. This reflects the improved employment situation in major economies that have begun recovering from the COVID-19 pandemic. Cash remittances rose 2.53% in July. That's from $2.8 billion a year earlier, based on the data released by the BSP. July remittance inflows are the highest since December of 2020 and over 8% higher compared to June. For the first 7 months of 2021, OFW remittances stood at about $17 billion in total. That's up almost 6% compared to the same period of last year. Meanwhile, the government has also raised an initial $866.2 million from its maiden retail dollar bond offering targeted at individual investors. The Treasury Bureau awarded $551.8 million worth of 5-year RDBs and another $314.4 million via the 10-year dollar-denominated notes during its price-setting auction on Wednesday. The 2-tranche offer attracted tenders that exceeded the initial offer of $200 million for each tenor. The 5-year bonds, which mature in October 2026, had a coupon rate of 1.375%. On the other hand, the 10-year bonds due in October of 2031 fetched a 2.25% coupon rate. The offer period runs until October 1st unless it is shortened by the Bureau. Kicking off the Thursday markets report with a quick health check on the local unit. This, of course, as we finally see remittances surging and the highest we've seen in 7 months. Take a look at my terminal here, strengthening a touch. You can see that lower print here is actually strengthening against at least the US dollar. We are trading at 49.728 to the greenback. And how is our local bourse opening amid this, so to speak, first day of the 5-level alert system? Seems to be on the mend here after having slid yesterday. You can see on my terminal here, we are up by 0.13%. That is still nevertheless below the 6,900 levels that we were trading at just a few days prior. Let's take a look at which sectors are pulling the bourse up. You can see everyone save for holding firms, which is still in the red, down by 0.8%, are actually gaining ground, led by properties up by 0.9%, together with services, industrials, and financial. So almost a broad-based recovery here, save for the holding firms, of course, dragging down our index. Let's take a look at the biggest movers of the day. You can see ICTSI leading the charge here. That's up by 3.4% together with URC, Ayala Land, and Metro Bank. So really very mixed picture. It's not necessarily consumer stocks. It's not necessarily the mall players or the restaurants here. But on the other end, you've also got the so-called tech stocks. You've got Converge down by 2.5% together with Globe, which is also sliding a touch by more than 1%. And one company that I did want to mention, that is not, of course, being traded here, but is one to watch out for is Monde Nissin. Before Monde Nissin is Carousell. That is, of course, Singapore's newest unicorn, and that is the online marketplace Carousell. They are raising funds now at $1.1 billion of a valuation, and that is going to be happening right now. The company got $100 million in a round led by South Korean private equity firm STIC Investments. Now, what has brought this about? They are saying that basically due to the pandemic and related lockdowns, they've seen a surge in online selling. Of course, your pre-loved items there for people trying to raise some cash here. Carousell has largely benefited from all of that. They did mention this from their Chief Executive Officer, Kek Soo Ri. The accelerated adoption of digital experiences is an opportunity for us to double down on our re-commerce efforts with a focus on convenience and trust. So very interesting play here. Of course, we do have Carousell in the Philippines as well. We are one of the 8 markets in which they are present. They have also, in the rumor mill, waived a U.S. listing there. According to People with the Matter in June. Now, I did mention already preempting Monde Nissin because that is, of course, the focus as well of today. We are looking at Monde Nissin trading at 19 pesos, which is flattish. This is, of course, one of our beloved IPOs. And if you think that you should be cutting down on instant noodles to have more nutrition, think again, because their president and director, Betty Ang, says that they, just like everyone else, are putting health on the forefront. She tells Businessworld the company's near-term growth hinges on its in-home products, such as Lucky Me. Let's take a listen.
Our ramped-up research and development is focused on new product development that is aligned with our aspirations for sustainability and health for customers and for the planet. In the Philippines, our new healthy Lucky Me noodles, utilizing our high-speed airflow technology, is a good example of this. In corn, our meat alternative business, we are putting significant research and development behind new product development to create not only better products, but products specifically tailored to the taste of various markets we are seeking to expand.
What has changed in the way your company conducts business, and what changes will be permanent for you?
COVID and the uncertainty caused by it has forced us to be more flexible, agile, and resilient in addressing challenges. Additionally, the rising commodity prices has put greater emphasis on efficiency of our operations. These challenges have made us stronger as a company, and changes put in place to address these challenges will remain with us going forward. One positive change from the pandemic has been the acceleration of consumer adoption of online purchasing of groceries. Our e-commerce channel, a segment that has been relatively slower previously, has seen strong growth during this pandemic, especially corn, and we hope it will sustain post-pandemic.
Well, we were talking about changes, but one big change this country will undergo next year is a change in administration. And, recovery for many or most businesses will take 1 to 2 more years. So it will extend well into the next administration. So I guess I have to ask, what kinds of policies or reforms do you hope to see in the next few years that will help recovery?
We are very concerned about the health of people and our planet. And as such, we do hope to see policies driving positive practices and discouraging unsustainable practices. We hope to see policies to better address environmental issues. For example, the mitigations of plastic waste and the reduction of emission of greenhouse gases. For our part, in the Philippines, we have plans to fully offset our plastic tonnage for our biggest brands and hope to be using 100% renewable energy in our plants where available by 2022. As I shared earlier, we are investing in high-speed airflow technology, and that will significantly cut our oil usage, therefore dramatically reducing our carbon footprint.
Your idea or thoughts on how you see your post-pandemic world and how are you positioning for that new reality?
Okay. With the global warming reaching the tipping point, we may see more frequent pandemics, more extreme weather events, more severe natural calamities like floods and forest fires. All these will create increased awareness for health and sustainability. We see this awareness driving a long-term secular trend. And as a responsible food company, we aim to help provide sustainable solutions in the area of food security and nutrition security. Provide our customers with tasty, healthy, and sustainable products, which is better for you and better for our planet.
Let's go to one of your staples. Despite a decline in revenues for key products like noodles and biscuits, their market share actually increased. How do you plan to protect and further grow these shares, for instance, against the influx of popular noodle products from neighboring Asian countries?
We did have a modest revenue growth in noodles in the first half of this year. We hope to grow through continued innovation and executing well in our operations. As previously mentioned, we believe our healthy Lucky Me noodles will provide a unique value proposition to our consumers.
And then your other main business is meat alternatives. And you're looking to further push corn further in the UK and the US. But are you now also looking at other markets? Which ones are next in line and ripe for healthier foods?
Yes, corn is already available in 21 countries, including the Philippines, where we relaunched in July. And with our quick service restaurant strategy, we are in discussions with a number of global and regional players in many different markets across Europe and Asia. We will let you know if these exciting partnerships finalize.
Okay, you've talked about partnerships with fast food chains. Is it?
Yeah.
Anything in the pipeline for M&As? Are you looking to forge or acquire more companies producing healthy food and beverage products?
Yes, we are always looking for and considering a wide range of opportunities that can enhance our growth and aligned with our aspiration of health, sustainability, and food security for our customers and for the planet.
And before we let you go, guys, just take a look at one stock here, shining Emperador up by 5.5% to 17 pesos and 90 centavos. This, of course, is just in. The rumors are true. Emperador has officially applied for a listing at the SGX. It's, of course, the Singapore Stock Exchange. We're going to get more details on that this afternoon, so stay with us. And that's a first look into the business day. Today is Thursday, September 16, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.